Okay, we are live. Welcome, everyone, to the third edition of Weekly TradeView Live. I'm your host, Ben Tracy, leader of strategic business development here at Vizion, and I'm joined here by my wonderful two co-hosts, Tyler, CTO, and Kyle, CEO. Kyle, for our new listeners that may have joined this week because they've heard all the chatter on LinkedIn and in the media about what we're doing, what is TradeView? What are we talking about here today?
Yeah, TradeView is a leader in global trade intelligence. It's a SaaS application. It is a data set, and most importantly, it's a whole host of answers to a lot of tough questions surrounding supply chain, logistics, and global trade at large right now. Um, so with that little prompt, Ben, we're here to use TradeView in TradeView Live to actually answer questions that have been coming from the audience or questions that have been coming up in our conversations, either with customers or with partners or with media in the past week. And just at a high level, so you understand TradeView being an industry leading trade intelligence platform, we cover 57% of all containerized trade worldwide. So 57% of all container shipments, three times more than any other solution in the market. We've profiled more than 1.5 million companies with forecasts looking 90 days into the future. What are they booking? What's in progress? What's planned, et cetera. And we leverage 10 years of data to be able to identify supplier and product networks, build maps of those networks, and have layered a AI researcher on top of all this to deliver custom insights when you just ask a question. So we're going to be using TradeView to answer a lot of questions today. And usually one of the first questions that pops up when we're talking about this is, where does the data come from? Well, TradeView is plugged into all the major ocean carriers, multiple booking platforms, rail carriers, satellite AIS data, trucking platforms, et cetera. And we're pulling in both a combination of the booked freight as well as joining it to real-time visibility and tracking data. And that's how we can follow global trade from planned to in progress to delivered and provide all these great insights. And that's how we can forecast the future is that because so much of our data is built on ocean bookings, we're actually seeing what companies are planning to ship before it's ever been loaded into the container. And so this gives us a model with a lot of confidence in telling you what companies are doing right now, what they're planning to ship, what they're canceling, and that might be a little bit of the topic for today as well, or what they're holding on. And it's quite unique because, again, we can forecast things because we see this data from the planning stage, the in progress stage, to the delivered stage. But Ben, maybe you want to kick us off because you're the master of ceremonies for the question collection that's been happening in the past week, and it's been a very lively week, or last 2 weeks.
Yeah. And just to be clear, I mean, there are lots of questions we can't answer. We're not here to answer policy questions. We're not here to answer political questions.
What's the administration going to do next?
There are some data sources where there's certainly some data sources we're not plugged into yet, but I think this is a helpful, 30 minutes or less to get an understanding of the capabilities of our product, but how they relate to these current events that we're all so impacted by. So yes, over the last week, since last Tuesday's session, the main question that I've gotten from the supply chain community, the investment community, from everyone that's really reached out who's impacted by global trade is what's happened in the last week. You said that there was this sort of big week over week decline. We saw things sort of stabilize for a week. What happened in the most recent week that would have ended this past Sunday, April 20th? So are we seeing a continuation of this decline? Are things starting to pick back up? So that's the first question. Have we seen this decline continue? And what I did to ask that is simply go into our TradeView AI agent. You can also do this in our Data Explorer. You can view these trends and lots of different flavors in the TradeView platform. but I said, just show me unique bookings for this year by TEU total, broken down by the date when they are initially booked. So that's what I plugged into the agent, and the results we'll see on the slide, Kyle, that you have.
Boom. Yeah.
Which is that, yes, we are seeing the decline continue. And in fact, in the most recent week, the decline globally was bigger than we've seen ever before. So we saw declines in that initial week of March, looking only at confirmed bookings by TEU totals of 26 and 15%. But the most recent week was almost 56%. We are now seeing a decline year over year. I think we were up as far as in comparison to 2024 for these same weeks, but the last 3 weeks we are definitely down for those volumes in 2024 for that week.
And not just down, but like nosedive. Like this
we are significantly
serious drop.
And that's globally. That's all bookings that are confirmed for any export going to any country for import. So what about really the topic that's at hand, which are U.S. tariffs and trade policy? What about for U.S. imports? Are we also seeing that same decline? So I asked a very similar question. Just copy paste. This is what I'm doing. Copy paste. Change the word slightly to include U.S. imports as the filter, and the results load down below. And when we plug that into the statistical change chart, here's what we see. There, on the next slide. Yep. We are seeing a similar drop. In fact, it's just a little bit above what we saw for the global number. Over 60% week over week decline. We are down now over 70% from where we were in that last week of March. And in fact, this is the first week really since the Chinese New Year in January where we saw a decline year over year. So for U.S. imports, we've been on the up. We saw increases all throughout 2024, and we saw increases all throughout Q1. What we now see for the most recent week is a year-over-year decline. So this week, in comparison to that week the year before, we're down 6%.
And it's so interesting that it's only 6% year over year.
Right.
Like what was going on last year about this time?
Yeah, I mean, you can look at seasonal declines, based on the Chinese New Year, but I think that the conversation about front loading really didn't start to pick up as far as like an early peak season until I think it was May or June of last year. So May, June saw a really big increase. We saw that continue for the rest of 2024 and into Q1. So that year-over-year change has been consistently, you see on a weekly basis, anywhere from 40 to 130% above the same time period for that year before. We are now seeing that start to decline. So when folks ask, well, how is this going to translate for the actual containers that arrive into the U.S.? These are bookings that are scheduled to depart 1 week from now up to 4 weeks from now. And then the transit time for those containers to arrive into the U.S. are anywhere from 20 to 50 days or more. So I would expect over the next 4 to 8 weeks that the actual U.S. Import arrivals, these containers actually landing into U.S. ports, will start to see that decline catch up to the booking date. The last one I want to share an example of is U.S. import bookings, but only when China is the origin. So this is kind of where all the attention's been paid with the ramping trade war between the U.S. and China. Are we seeing a similar decline? Here are the results and the statistical change. Kyle can share in the accompanying slide. We aren't seeing as steep of a drop. Perhaps the correction was already made. I know that there are exceptions that were made for certain electronics like cell phones temporarily. So it's possible that has mitigated some of the decline that we've seen week over week, but we are still seeing bookings down from where they were in March, down over 60%, actually 68% down from where we were the week of March 24th. And as far as a year-over-year change, it's pretty significant, in comparison to the week of April 15th, 2024. Yeah, down almost 38%.
Yeah, and I've been digging around over here. I've been a little quieter on this side because I've been looking at in Data Explorer over in TradeView, just trying to get a chart of what this drop off looks like more recently.
Yeah, and we've had customers that want to plot the number of actual departures, the number of arrivals. Again, arrivals into the U.S. We haven't quite seen that same drop off yet. I do expect we'll see it in a couple of months when these containers start to actually arrive. So what did you plot?
I have a slightly different chart here because I was looking at this is imports into the U.S. still, any origin, but so I'm kind of back of the slide right now, but you could see all the front loading that was happening with the bookings here going into the U.S. And then you can see the precipitous decline of bookings as we're like, this is week 16, this is week 15, week 14, this is looking at the booking date, this is counting bookings into the U.S. And so front loading. Oh, tariffs, boom, just falling off a cliff.
Yep.
And so sometimes the visual is helpful versus just the colored graph.
Yep.
But it's that's why it's not just a drop; it is a nosedive.
Yeah, and you asked, what's different this year versus last year. I think the main thing or what happened. I think one of the things that was not happening last year was a bunch of tariffs. There wasn't a trade war in place, right?
Well, there was a trade war, but it was, the trade war kind of got kicked off since 2017, right, with the first tariffs on China, and we've kind of seen that play out. But the scale of this new wave is multiple larger. Like 20, 30 times larger kind of implication than.
Yeah, and I think the other side of this too, right, is we see pretty significant evidence of front loading that paired with increased tariffs from any import that's coming through, along with reduced purchasing power. It's a pretty nasty recipe for a drop in shipping.
And partly, because this started back in 2017 and has kind of, accelerated quickly. We do see companies having had some time to adjust their capital expenditures, their supply chain networks, et cetera. And so this question was interesting to me then on this. Like, how much have we seen bookings into Canada change over last month? Because there's an opportunity to import something from, like, say, Vietnam into Canada, where Vietnam was going to be 46% or something like that tariff, which blows up a lot of businesses. Yep. But if they import it into Canada first, and can they just come in from Canada at a far lower tariff rate? So you were getting that question, and we didn't. I'm just skipping past the part of getting.
At the same time, imagine we go into TradeView AI, we plug in that question for imports into Canada. We are also seeing a similar decline, over 50% from the most recent week, and we're down quite a bit from where it was in March. Now, Canada has its own seasonality, its different industries of import that could be contributing to this. But when we compare it to the year before, we are seeing a pretty significant drop off for the most recent week. We were up year over year up until the most recent week, where we're now down 50%.
Yep.
So the U.S.'s closest neighbors, Canada and Mexico, is sort of the focus of this new search, which I don't think we've necessarily shared on TradeView Live before, but we have shared with some of our other partners. So looking at Canada as the destination for these goods. And then the second question would, of course, be how have these bookings changed when Mexico is the destination instead?
Well, quick comment here. There's a really interesting roller coaster effect here if you kind of overlay this with the Trump administration, right? You have ahead of Inauguration Day. This is a pretty meaningful decline, right? Ahead of Inauguration Day, the wait and see what's going to happen. Nothing comes out immediately after the 20th. So there's, a few weeks later, okay, maybe we're good. Let's get some stuff shipped. Let's do some front loading really quickly. And then we're seeing, okay, it's dropping back off with the tariffs being announced. But yeah, very much a roller coaster effect here.
And then, oh, we might be out of order here. Is Mexico in the slides? Unless it's, you need to refresh it.
No, did we skip over Mexico? 1 second here.
I thought we got it in there.
Just checking. 1 moment.
It should be after the Canada slide now.
Okay.
I think that should be slide 13 and 14. Yep. So similar declines. Again, over 50% week over week. And Mexico has actually been down consistently over the past couple of weeks and down year over year, predating these tariffs. So we've seen a decline year over year beginning in the second week of March. So a new question that came up was talking about origin delays. There have been a lot of conversations about blank sailings, about carriers that are canceling or temporarily suspending certain services, leaving from Asia going to the US, as well as shippers who are trying to cancel their orders because, hey, I can no longer afford to pay this tariff. I think I saw another statistic out, or headline out yesterday, that DHL is no longer surfacing orders that have a declared value of less than $800 because the de minimis exception is no longer applying for goods from China. So when we think about export delays, there's a whole host of different metrics that you can extract from what's in these shipments. What we decided to pick on was a couple of things. So I think the first view is just the total TEUs that are, Tyler, can you clarify, is this TEUs that were loaded onto vessels or TEUs that departed from Chinese ports?
I'm not sure without knowing your exact query. The one that I'm looking at right now is based on the actual gated in timestamp.
Okay. And that's for Chinese ports overall. So we are seeing a increase, it looks like week over week, in the number of containers that are being brought into Chinese ports for exports overall. I decided to go a little bit deeper into specifically when Chinese ports are used as the origin for US bound shipments. So sort of an additional filter to this that I think I'm sharing the right tab here. If we can load to mine. So there's actually two queries to this. One is the weekly total of containers loaded onto vessels when China's the origin for a US bound shipment, broken down by week. And then the second is the weekly total of all containers that gate in. So the question is, in this case, are there more containers coming into Chinese ports than are leaving the port?
Yeah, gate in at origin, like should be getting ready to depart, but aren't being loaded and taken away.
So I download those two totals, and this isn't going to look all pretty and color coded and whatnot. But I download those two charts and I calculate the difference. It's really that simple. And over the last 8 weeks, we see that difference begin to increase from a negative amount, meaning that there were more containers being loaded onto vessels leaving from China to the US than were coming in, to a positive amount. And that positive amount has actually begun to grow. So in the last 2 weeks, we're talking about 60,000, 92,000 container surplus. That's, again, the difference between the amount of containers that are getting in versus the ones that we see loaded. Now, there's all kinds of particulars in here. Again, a blank sailing, canceled shipment. There might be a booking that's made weeks in advance and they happen to bring in that container early. You have the origin customs clearance process, which is unique for China. I learned about this from one of the meetings I had in the last week. There are all kinds of reasons why a container might not yet be loaded onto the vessel or miss that cutoff date, or there's a blank sailing.
But perhaps not for this many.
Yes, right. So, with all of those different extenuating circumstances, I think we're still seeing an increase, and an increase that is likely going to continue to go up and could potentially cause some backlog depending on the individual port. So the last question I asked our data science team to look into was, hey, I'm seeing all these numbers. Can I just express this as a ratio? Can we break this down on a daily basis and start to see just the volume? And we picked a couple of ports. So there was the Yenchen port and then 2 ports in Vietnam. So specifically for those UN low codes, and I realize this view might be a little bit small, but generally speaking, that dip that goes down and then begins to creep up is an indication that we see more containers getting in than are loading onto vessels. And this is a ratio that's a rolling 7-day average. So it sort of normalizes all the different bumps and the things that change with like weekend dates and seasonality and whatnot. Controlling for all of that, the ratio is definitely going up quite a bit. And for that top port, which is one of the largest ports, that's the Yenchen port, we see that going up pretty significantly beginning at the end of March. So more to come on, I think, the performance metrics around these shipments. I think we'll continue to bring in booking trends, but please send us your feedback, your comments. What questions would you like us to answer? And I'll continue to bring some new ideas. Other than that, Kyle, Tyler, anything else?
Thank you all for helping put this together, and thank you all for attending. Thank you for your questions, and please send your questions in advance of next week so that we can get on getting pretty answers ready for you in advance. So Thank you all.
And if any of you happen to be in Brazil or going to Brazil, Kyle, you're flying out tonight to Sao Paulo for the, what's it called, Intermodal Conference?
Intermodal South America Conference, yeah.
And for any of my Georgia folks, I'm going to be at the Georgia Logistics Summit all day tomorrow. So you could find us in person there, and we can look at some of these stats as well.
All right.
All right. Have a good week, everyone.
Thank you.
Bye-bye.